Let's take a look at some info and charts on Dogecoin for Brave New Coin. So this is just a pure coincidence that I'm doing analysis on Doge today. I set my schedule kind of a month in advance for content, and it just happened that today was the day. So here we are. It's always fun to start on the Wikipedia page. So if you don't know, Doge has been around since December 2013. It started and still is a joke. Let's be clear here. Taking the world by storm ish. I'll get to that. But for the most part, it was a great way. It was a sandbox to get people in, to get new people in, to allow people to fool around with this stuff without losing a bunch of money, making mistakes. That was the general purpose of Doge initially. Jackson Palmer, who is no longer connected with the project, worked at Adobe. Billy Marcus, I don't really know anything about, to be honest, but he's also connected with the project, and they've also done some fundraising early on, 2014, Winter Olympics, water, NASCAR, the community. So the community's always been about spreading the Doge love as vast and wide as it can. So there's a little backstory on Doge. Getting to the heat of the meat, the fundamentals. Doge is a script coin with a targeted block time of 1 minute, and that has risen slightly over the past few months as hash rate's been kind of super volatile for Doge specifically. Doge is merge mined with LTC, Litecoin, meaning if you're mining LTC, you're mining Doge, or vice versa. And this idea was proposed by Charlie Lee many years ago in order to save Doge from certain doom because of security concerns surrounding a 51% attack. So really, we can thank Charlie Lee, the creator of Litecoin, for Doge's current success, because without that idea, without that actually happening, the merge mining, Doge probably wouldn't be here today. So hash rate has continued to increase slightly, super volatile. This follows LTC, this follows LTC price, this follows Doge price, this follows mining fees. All this stuff is related to one another. It also has to do with botnets, which I'll talk about in a second. But there's a lot of stuff that goes into this graph as far as deciding kind of algorithmically on the miner end where they put their hashing power, where they put their electricity, where they put their CPUs and GPUs or ASICs. So this whole chart of hash rate is kind of a distillation of all that information. And like I said, block times 1 minute continue to increase slightly. You can see it's around a minute, 4 seconds, a minute, 5 seconds, something like that. If we look at the script ASICs specifically at 4 cents per kilowatt hour, heavily in profit, all of them. This is per day. The newest being released March 2021, last month. So those miners are fat and happy. Obviously, and based on my calculations, the notional value of Doge per day, excluding transaction fees, is $5.18 million at the current price. So that'll have a perpetual selling pressure. And essentially, if you take the natural sellers, the miners, and say, okay, what are they going to do? They're going to sell, most likely, because why wouldn't you? If I was a miner, I'd sell all the way up. I'd be selling every day, regardless, relentlessly, right? So the Doge price needs to absorb this much in order to even stay at current price per day. So long as the fever, the penny stock pump and dump fever is there, Doge can hold itself at current prices. But as soon as that diminishes, it's just going to be, as it always has been, a slow bleed down. Now, the technicals were favorable for this move, and I'll get to that in a second, but just be careful. Keep that in mind, because this is the type of chart, in my opinion, that could easily just crumble on top of itself, like the Burj Khalifa pattern, to just straight down. It's definitely concerning. Certainly surprising that it held prices it held leading up to this, but definitely concerning. Back to the botnets real quick. So there've been botnets throughout the years for Doge. This was in 2014, meaning people's computers are just taken over with crypto jackers, mining, malware, that sort of thing. There was one discovered in 2020. There may or may not be one now as well. We don't really know about these things until after the fact. And that's also important to keep in mind. How are the botnets involved in the price? Are these botnet people having their cake, eating it too, and then buying a bakery by sending bots towards the price? There's this isn't just this isn't just retail FOMO. This is everything FOMO. This is an amalgam of many things, but it very much reminds me of the GME narrative, which was, this is all Wall Street bets, this is retail, when in reality it was much more than just retail and Wall Street bets. It was hedge funds eating other hedge funds. It was high net worth individuals playing in the casino as well. All that's certainly involved here. If we go to inflation for Doge, back to like the mining rewards, Doge inflation is currently lower than Ethereum in the green line here, which is funny because it's Doge, right? So Doge inflation 3.8%, ETH inflation 4.2. Now this is going to change with EIP 1559, but just interesting. And then Bitcoin inflation kind of almost near an all-time low, thanks to that hash rate and difficulty adjustment that's still working its way through the network. So if inflation was much higher than it was, it would be hard, again, because of that notional value per day created by miners and the block reward, to support the price. If inflation was 10x from here, it'd be much harder to get this thing going. If we look at transaction counts in the line here and average transaction values in the fill, transaction counts are effectively at an all-time high. I mean, if we zoom way out, this was the initial distribution period for a lot of the coin in the early mining days. So I think it's fair to just exclude that from the chart. And we're currently at around 73,000 transactions per day. So even though even though I'm saying it's a joke and it's a pump and dump scheme and blah, 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 there's obviously on-chain support here for price. So it makes sense that if you're seeing all this on-chain activity, price is exploding with it. One thing that's not on here is all the the Robinhood transactions, RH. It doesn't necessarily use the Doge chain for those trades. So those aren't going to show up here. You're definitely going to see that in price and price action, but you're not going to see it in this on-chain chart because for the most part, those don't ever touch anything on-chain. So average transaction values skyrocketing with price as well. No surprise there. And transaction counts even higher than they were in March, in January. So just perpetually pushing the Doge chain up. If we look at unconfirmed transactions for Doge, they're currently less than 300 and have been since late March. So it looks like the chain is handling this increase in activity rather smoothly, and there isn't a massive backlog of transactions based on this metric that I can see. Total mining fees, also important to look at. 180,000 USD was the peak per day, 187,000. You compare that to ETH, and it's a blip, right? ETH is at 33 million, just to give it some perspective. So Doge transactions are cheap. Obviously, there isn't DeFi or anything on Doge, but also important to keep in mind that it's not just the block reward. There's also fees to take into account on top of the block reward. Now, fees versus the block reward is next to nothing, right? If it's 5.1 million notional per day and it's 100,000 in fees, that's a drop in the ocean. So not that big of a deal. Much more impactful for ETH is what I'm trying to say here. But fees are definitely at an all-time high for Doge as well. If we look at NVT, inverse metric of economic utility, and active addresses in the fill here, active addresses continue to hit effective all-time highs, barring the early mining stuff, multi-year all-time highs. NVT continues to decline, which says on-chain activity relative to market cap actually looks decent. It looks bullish, doesn't look super overbought here. So again, it says price is supported by this on-chain activity. It's not just this blind speculation. There's actually some fundamental reasons why price is where it is. Lastly, looking at MVRV, again, effectively all-time high, aside from the extremely early days. MVRV is market cap versus the amount of on-chain activity. And this is probably the most bearish of all the fundamental metrics. MVRV basically has never been this high in the modern era. So this is saying that market cap is definitely oversold. If we compare this to price, we can say that historically, when price was at the previous all-time highs, MVRV was above 3, above 3.5, got to 4 even in 2017. And MVRV is currently above 4. So that says market cap is 4 times greater than the on-chain market activity at the moment. But again, that excludes Robinhood. It's important to keep that in mind because Robinhood is definitely a big force and part of this, certainly, as are any of the sort of retail trading venues where you don't necessarily need to remove the coins and actively participate on the chain. If you look at the Dogecoin Google Trends all-time high, I mean, that really says everything. The fact that it hit an all-time high January 24th, basically went to zero, and that went back to an all-time high. I mean, again, this is just more and more evidence that the prices up here are justified based on what the metrics are telling me. You know, if I was looking in a vacuum at metrics like this on anything else, I'd say, yeah, of course it's bullish, right? Lots of activity here, lots of news articles. Every company under the sun is sending out some Dogecoin related tweets. So yeah, all this is going to pump this up. Doge Day, you know, whatever, right? All that's going to influence Google Trends here. Let's have a look at some technicals. We'll start sort of how we got here a little bit. And it's another reason why trend metrics make sense to me. If we're bullish on trend metrics at the end of November, that doesn't say we're going to hit all-time highs. It doesn't say we're going to have this insane rally. It just says, here's your entry, buy and hold, set it and forget it, right? Has this been noisy? Yes. It's crisscrossed several times. But if you can look at this two ways. You can say, okay, this is a range. I don't care about this until it breaks the range. It is bullish, but I'm not going to take that trade. Or you can say, I'm taking every trade regardless. I'm long here, I'm closing it, I'm long here, I'm maybe closing it, I'm long here, or closing it, and then I'm long here, right? Like that's how you would trade this mess. And I'm mainly looking at Binance just for the volumes here, but you know, zoomed out, it says you should have been holding since November. I should have been holding, you know, that's what I'm telling myself, right? There's no reason in a vacuum based on trend metrics you wouldn't want to be holding this. Look at the 6 hour. There's continued concern, as there was in February, for a bearish divergence on prices up here. So not only are you getting these tiny divergences on lower time frames, but this is also a just macro divergence on volume. You're getting higher prices on less volume. You're getting a lower RSI on higher prices. So collectively just growing bearish divergence here. Now that isn't to say that this is going to tumble immediately, but it tells me be careful if I'm long up here. And you can see how long this, how many days really, you know, nothing happened for Doge, right? Basically between February 15th and early April, Doge was flat, sideways, didn't go anywhere. Again, back to trend metrics on the weekly, I probably talked about this in January, but there was a weekly Kumo breakout on the cloud. So again, in a vacuum, this is a lesson on cloud. This is a lesson on taking trades. Even though you may not be a believer in the coin, you know, if I'm a pure technical analyst here, I'm long and holding from late December based on the weekly Doge USD chart. On the daily Doge USD chart, you had another entry signal in December. You had a crisscross here. So even as late as April 10th, let's say, there was technical evidence to be long. This is the TK cross recross. Again, even if you're not trading this or long this or care about Doge, this is a great lesson in cloud stuff because this is exactly the type of thing you want to see. You get highs, those highs fade, price goes flat, price goes into cloud, get the bearish TK cross, then you get the bullish TK cross. You know, that's the exact entry you're looking for. There's a reason this is the strongest bullish continuation signal in the cloud system. 12 hour, a bit noisier, but just as good as far as signals are concerned. Close your long, open your long, into the cloud. You close your long, back out of the cloud, bullish TK recross above the cloud, open your long. So again, depending on how you want to trade this on whichever time frame, whichever settings, the 12-hour doubled settings are effectively the daily singled, and you can see how the daily singled is a bit noisy compared to daily doubled, which is the only reason I use daily doubled over daily singled. Based on candlesticks, and again, February to April, you had evidence for a W double bottom. We broke which I believe was the all-time high at that time as well. Just more evidence to say, like, yeah, I should have been long this. I just wasn't paying attention. You know, I'm just looking at me personally and how I traded this, and I didn't, and I should have been. Something else you can look for, I mentioned this on Monday's video, but you had this tight spread, or sorry, a widespread, thin books, and then it looks like market makers stepped in April. Things got a lot tighter. right before the move. So I think that's a good lesson if you're looking at candles for altcoins. This is Polo specifically, so that tightened up real quick. So it looks like there was some ARB and or market makers stepping in at that time, anticipating something like this. And back to that measured move, it hit the 7618. You don't see that too often as far as fib extensions are concerned, based on the high and the low. So where do we sit now on the 1 hour? I don't want to be, that guy who's like, this is going to dump, but it does look inverted Adam and Evie, and you can say maybe this is an M top as well, rounded top, all variety of things. Can this still hit $1? Sure, right? But right now, as we sit, it looks just about as neutral to bearish as it did back here, right? It looks like it did in February, where just at this point, if it's going to go higher, it probably needs time to reconsolidate, to reaccumulate, to let the people sell to new people who are buying, stuff like that, right? And then the cycle can continue. The way to cancel this out is if we break 45 cents. It would have to break all-time highs to cancel out the potential M double top, the potential inverted Adam and Eve. And oh, by the way, there was a bit of a Adam and Eve had an inverted head and shoulders thing before this breakout, even on the hourly, on the 14th and 15th. So there's plenty of reasons. I keep saying this, but there's plenty of reasons fundamentally and technically why Doge is here, right? For some of us who've been around since 2013, it is unbelievable. But if you were paying attention, it makes perfect sense. If this does play out in a bearish manner, I would expect a target between 9 and 15 cents. That's where the measured move sits. That's where the 1618 fib extension sits. And that's where the most recent substantial volume sits. So plenty of reasons why down here is where, if you're trading this on low time frames, you'll probably find some other buyers with you. The Doge BTC chart, I have no commentary. It is amazing. It'll be in textbooks. It'll be in the history books. It'll be talked about forever. It is eternal. Doge is eternal because a chart like this is amazing. The fact that it went from basically 0 to 630 sats in a few months is really quite something. And why, for altcoins, my general strategy is just buy low, sell high, because you never know, right? Altcoins love to just run like this. Doge, ETH, very similar. Buy low, sell high, rebuy all-time highs. Plenty of technical lessons in here. So overall, technicals, fundamentals, and alignment, that there's a reason Doge is up here. I'm concerned with the notional value of the block reward versus demand over time. Technicals look a bit weak in the near term. Probably needs a reaccumulation if it's going to go for another run. But, lots of people out trading me on this. So what does it matter what I have to say anyway? If you do want to check out how I'm trading BTC and ETH, we have a portfolio on Enzyme.finance. We also have a DeFi portfolio on Enzyme.finance. None of this is involved with Doge. This one is a 15 to 20 coin basket, effectively, of DeFi blue chips. ETH and BTC is just ETH and BTC, obviously, with USDC. And I have the ability to short both of those as well through synthetics. And how this works is it's non-custodial portfolio management and completely transparent. You can view all the trades, what I'm doing, when and why, that sort of thing. So that's all I have for this one. Like, comment, share, subscribe, and happy trading.